All right, so I think we're going to get started now, and we'll let others join over the course of the webinar. My name is Robert Friedman. I'm a partner in the Washington, D.C. office of Holland and Knight in the international trade practice. It's our pleasure to welcome you to a webinar entitled Technology and National Security Nexus. We will hopefully over the next hour help all of you navigate financings, foreign investment, and federal government contracting with a focus on early stage technology and national security. I'm going to briefly introduce Bruce Adams, who will be our moderator for the webinar, and then I'll let Bruce make some introductory remarks, and then we'll delve into the substance. So Bruce is the Executive Vice President, General Counsel, and Corporate Secretary of In-Q-Tel, where, among other things, he manages the organization's legal affairs. Bruce, before joining In-Q-Tel, was a partner at Arnold & Porter. I think that I've known Bruce for a number of years, and I think he's the perfect moderator because he encompasses all of the various themes that you're going to hear about on this panel. He understands technology, including an exceptional understanding of In-Q-Tel's portfolio companies. He understands corporate finance. He understands government contracting, and he understands the law that animates each of these issues. So I'm very pleased that he will be helping us through the webinar today. Bruce, over to you.
Thanks very much, Robbie. So let me give you just a 2-second overview of what we're going to do. I'm going to give a brief introduction. I'm going to introduce our panelists, and I'm also going to provide a brief overview of the goals of today's program. Following that, George Hoyam from In-Q-Tel is going to give an overview of In-Q-Tel, take about 5 minutes to do that. And then we're going to turn it over to the panelists. And guided by some questions we've come up with, we're going to ask each panelist to walk through those common pitfalls and bridges to success for early stage companies to enter the federal market. And then at the end, we hope to have about 10 minutes for audience questions. I think the questions can be put in the chat and we'll pick those up, and we'd be happy to filter them and ask the panelists to respond. I'm particularly pleased to have the opportunity to moderate today's discussion. The subject matter is really important, and the panelists surely have wisdom to share with all of you. So I thank all the attendees for joining us. And we have about an hour, so let's get going. As Robbie mentioned, I'm from In-Q-Tel. George Hoyam is going to describe the In-Q-Tel model in more detail, but in brief, In-Q-Tel is a 501c3 not-for-profit. And one of In-Q-Tel's core missions is to bridge the very real gaps that exist between emerging commercial technologies that come out of venture-backed startup community on the one hand, and the government on the other. One of the ways that In-Q-Tel can assist in fulfilling that mission is to have the startup community and their advisors understand how the government works in seeking out and contracting for compelling technologies, thus enabling the startup community to avoid those common pitfalls and create bridges to success. That's why I hope it's useful to have us on the panel. Startups and the government are organized, funded, and measured very, very differently. And as a result, the processes are often misaligned in terms of their expectations, timing, scope, and resources. Startups are cash constrained, and the timing of the revenue really matters. Government budgets and procurement cycles are significantly longer than startup funding timelines, meaning that startups literally sometimes cannot afford to work with the government. The government has rules and processes that often disadvantage companies that are not aware of those special requirements. And those requirements are often not present in the commercial world. That's one of the reasons we're here to speak to you. Those are things like, who are your investors? Where do you source your technology? What rights the government expects to your intellectual property? Your panelists span a number of very important areas in helping the startup community to understand the government market better, and thus helping them to get ready for doing business with the government. They represent legal, risk, and business considerations. So with that, let's get started by meeting the panelists. Our first panelist is George Hoyam. George serves as the Executive Vice President of the In-Q-Tel investment team. In addition to leading that team, he has personally managed In-Q-Tel's relationship with cyber company Cylance, quantum company D-Wave, open source company GitLab, 3D VR company Matterport, cyber company Phantom, AI NLP company Primer, and satellite company Swarm Technologies, and a number of others. He joined In-Q-Tel from Blueprint Ventures, where he was a managing partner for 10 years. Previously, he worked at Hewlett-Packard Enterprises Company, where he ran the Internet Commerce Business Unit after helping Verifone merge with HPE. At Verifone, he had managed the Internet Commerce Division prior to its acquisition by HPE in 1998. George, importantly, has also served on the board of directors of the National Venture Capital Association, the venture capital's flagship trade association, where he advocated for issues relevant to corporate and strategic investors. Our second panelist is David Cole. David has led early stage and mature investments in DoD and Intel community government contractors for more than 2 decades. He's a partner in Holland & Knight's Corporate and Securities Group, where he assists domestic and overseas companies to complete M&A and capital raising transactions. He's helped grow early stage government contractors through inception to sale or major capital markets transactions, some of whom have eclipsed $1 billion in valuation. His teams have closed hundreds of early stage investments, M&A and public offerings of equity and debt in the government contracting and technology communities. He's a frequent speaker in the government contracting community, moderating panels consisting of industry's leading private equity investors and top CEOs. He also leads Holland & Knight's Korea practice. Our third panelist is Robbie Friedman. Robbie Friedman is a partner at Holland & Knight's DC office, as he mentioned, where his practice focuses on international trade, foreign investment, cross-border regulation, and national security matters. Robbie has worked with venture capital investors and early stage companies in a variety of industries, including cyber, satellite, microelectronics, AI, machine learning, telecommunications, data analytics, drone technology, and renewable energy. He has significant experience serving as regulatory counsel in connection with early stage financings and cross-border M&A. Prior to entering the private sector, he served for 6 years in senior legal and policy positions in the US government. And out of full disclosure, Robbie represents us on national security matters, including export control, for several years. Erin Estevez is our last panelist. She is a government contracts and M&A partner in Holland & Knight's Tysons, Virginia office. She has substantial experience advising companies in a variety of industries on the regulatory and contractual requirements for doing business with the US government, and frequently works with early stage technology companies considering federal sales. In her practice, she guides current and prospective federal contractors on establishing compliance programs, small business contracts and grants, national security issues, cybersecurity compliance, IP and data rights protection, and security clearances. For these businesses, Erin also has significant expertise in mergers and acquisitions and financings on both the investor and company sides, and establishing other business combinations such as teaming agreements and joint ventures for government contracting opportunities. Those are your panelists. Our goals today are to provide insight to you for early stage companies to best position themselves for success in the federal market, to offer tips and best practices from seasoned practitioners in a cross-section of legal and business fields, and 3, to develop a roadmap to avoid common pitfalls which often sidetrack companies along the way to success. Before we begin with the panelists and the questions, I'd like to offer George Hoyam an opportunity to give an overview of In-Q-Tel. In-Q-Tel covers many of the areas that the panel will discuss, and it might be interesting to have some background on In-Q-Tel. George, over to you.
Thanks, Bruce, and thanks to the Holland & Knight team for hosting this webinar. So we thought we'd take 5 minutes to just ground you in what In-Q-Tel is and who we are. As you can see from the slide, we're on innovation on a mission is sort of our charter, but we're basically the strategic investment arm of the U.S. intelligence community. We're actually a nonprofit, which is a surprise to many people. We're a 501c3, and we get our authorities through a contract we hold with the CIA. We have a board of trustees that controls what we do in concert with our government partners. Next slide, please. It's not coming up for me quite yet, but slide to advance. There we go. So we like to consider ourselves the intersection between the 18,000 venture-backed startups, the venture capital community, and of course our government partners. So the last place in the world a startup's going to go is knock on the door of the CIA. Like, how would you do that? So into that gap steps In-Q-Tel as a trusted partner. And we basically guide companies into problems of national intelligence and run pilots at scale against real problems to source innovation from the startup community to impact our national security. So we're very robust investors. We'll talk about how many deals we're doing a year, but we're a trusted partner that venture capitalists come to, startups and government partners, to guide the right technologies, very early stage, typically seed, Series A and Series B, into problems of national security. Next slide, please. So, the reason In-Q-Tel exists, because back when we were created 20 years ago, George Tenet at the CIA and a number of other people saw a gap in, R&D funding, which used to come from places like Xerox PARC and Raytheon and these sorts of things, moving into the private sector where venture capital was booming with the dot-com era, saying, hey, we need an entity that can reach into the startup community and harness this technology and capability as a national treasure and put this technology and products against our national security mission. Into that gap, In-Q-Tel was created 20 years ago with the charter to service that market. And, we're also creating visibility into the world of, global competition around economics, supply chains, technology, et cetera. And we play a pivotal role in helping to educate and create insights for our intelligence community partners. Next slide, please. So we have several things that we do. We invest for strategic investments and insight. We call these capabilities. So if you think of a young startup who is building a widget or a product and we painted it red and turned it on the side, maybe it could solve a problem for the national intelligence community. 95% of the companies we work with have never done business with the government. So we're often finding companies who had never thought about the federal government, and we're dual using and drafting their commercial success and putting that success into national security problems. We have a set of labs that work mostly in the open source realm to show the art of the possible as it relates to the open source business. And we've also launched a canvas of international outposts, basically in Sydney, Australia, and newly opened up Singapore to invest in the global stage. No longer is the best tech coming out of Silicon Valley or Boston. It's coming out of all the places around the world. And we need visibility to pick the best company from the best part of the world. So we cover Asia, Europe, Middle East, Africa, and we have very active groups that are in those geographies. Next slide, please. So, we work with our partners ahead of the curve. So basically, we want to inform national security in the forefront of these innovations. So we'd like to think the classic over-the-radar horizon. We've picked waves that have occurred before they were popular or even known to the government, like space tech or quantum computing, or interpretive AI, or generative AI. We've seen these waves usually a year or two ahead of where a typical government or intelligence community agency might see them. And we help to identify these things and invest in companies in advance of these things becoming visible to many government organizations. We have rapid delivery of enhancements, like when we find a company who wants to help solve a problem, typically they need features and widgets. And so we will help adapt those products to run pilots at scale against real problems. And we're totally focused and driven by the mission impact that these can generate. Next slide, please. And so that's basically In-Q-Tel. If we go forward to the next slide, in terms of our footprint, just to remind everybody, we've done 675 investments over our career. We have 5 offices around the world. We're approximately 160 people. So for a strategic investment firm, we're pretty large. And we're doing like 70 to 70 plus investments a year. So we're probably one of the most active strategic investors in the world. And 13% of our deals these days are outside the United States. Next slide, please. So our partners are listed here. It's not just CIA, but we get our authorities through them as our executive agent. But these are the other 3-letter acronym agencies. I'm not going to go through them all, but you may recognize NSA, FBI, DHS, et cetera. We're very active with Customs and Border. And so we have 10 years of activity with, annual funding against these organizations and being a multi-agency company. And a lot of times when we help startups, we'll often have 1, 2, 3, sometimes 6 agencies in a deal where we're actually trying to, pilot capabilities. So lots of shots on goal. In our international partnerships, we partner with our colleagues and counterparts in the geography, particularly in the US, in the UK and Australia. Next slide. And we explore, this is sort of our approach, we explore these technology canvases, we explain them to our partners, and then we enable these technologies to be applied at real problems at scale. Next slide. So we do two kinds of deals. We do small equity only deals, sort of $0 to $1 million or 500K. This is to get involved in a company and really get to know them. And we take board observer seats in every investment we do, which is unique from any other nonprofit or government-backed organization of our type. And we do these adaptation projects I mentioned, where we actually fund a pilot at scale against real problems and help fund that through accelerating development of the company's roadmap, getting the right features so we can run a pilot at scale, with the ultimate goal of the government and the company conducting business directly after we finish our deals. So 70% of our deals are piloted against real problems, and about 50% of those are adopted, meaning the company and the customer conduct business directly. Next slide, please. And so that's In-Q-Tel. We have what we consider a very efficient use of funding. I think right now, every dollar we invest in a young company leverages $44 in venture capital backed investment. So unlike other parts of the government, like DARPA or things that are more research oriented, we get lots of leverage and bang for our buck against, matching that with private capital dollars from the venture capital community. Next slide. And so these are some of the areas we invest in. We're not going to go super deep here, but it's a broad canvas across the whole technology sector, communication, sensors, autonomous. We also do some things in biotechnology around synthetic biology and bioterrorism. So if you have a company or a technology, it's probably safe to say that we can be involved in helping them. Next slide. Just in terms of the numbers, we've backed 30 unicorns. We've made 675 investments. We have 140 active adaptation pilot projects underway right now. We've delivered 1,200 pilots against real problems, and we've had over 400 adoptions. So we're pretty proud of our track record over the last 20 years. Next slide. I think that might be it. Okay, so why don't we shift and we can make the slides go away and just get into the panel questions. Thanks, Bruce.
So George, not every company can be an In-Q-Tel company, and you note the really remarkable success, but it's not universal. I'm wondering what you can tell us and tell the audience about what some of the key attributes are, in your view, of a successful In-Q-Tel portfolio company that contribute to sort of the success rate of meeting mission for our customers. And by doing that, you can talk to companies that may not be In-Q-Tel companies, but might benefit from your observations about what are key attributes of success.
Yeah, thanks, Bruce. Well, first thing we do, it's a bit of a misnomer. We don't, again, I said earlier, 95% of the companies we back have never done business with the government. If a company is doing business with the government and income maybe comes from the government or is a spin out, that's not where we add a lot of value. If you've already figured out how to find your way into the intelligence or defense communities, In-Q-Tel is not your company. But if you're a commercial company that has a technology that can be dual used against an intelligence community problem, that's where the sweet spot occurs. And if you have an interest in adapting your product and letting us follow your commercial roadmap to open up a dual use, that's where the magic occurs. Now, you don't need a federal sales team. You don't need cleared people. In-Q-Tel steps into that gap. And what we do, we have 40 subject matter experts on our team that can help dial the technology requirements our customers have and match them against a real end user problem. And so the trick is to come up with a real problem with someone who's in a real mission use case, match them to a company, and then a company that has the willingness and the flexibility to engage with us and help us fund and prioritize those roadmap features. That's where the magic occurs. And we wrap that around what we call a work program and help deliver that into a pilot at scale. So you have to have a willingness to engage with our company. You have to have a dual use mandate, because we want to draft your commercial success, and we don't want to build some one-off thing for the government. We want to leverage your commercial product, dual use it, and really get the bang of all the venture capital dollars you're consuming. So Bruce, that's sort of the profile of what really works best for us.
You have a lot of experience, George, in other sales areas to the government when you were at HPE and the like. Do you have any advice for folks who aren't necessarily directly going to the Intel or DoD community?
Well, there's other ways to get to the government. You need contract vehicles. Many of you may have heard of GSA schedule holders. There's a company called Carasoft, which is a real popular one. So you need to have, these things don't sell themselves, and just signing up to get a GSA contract isn't going to get your product in. So you really need to go in, find an end user with a real problem. The intelligence community is particularly opaque. And, most VCs are saying, don't bother with the government or the intelligence community until you're much, much larger. And I actually frankly agree with that. Civilian agencies, where they don't require cleared resources or, classified contracts and that sort of thing are a lot easier to sell to than the intelligence community. Now, if you want to crack the intelligence community, partnering with somebody like In-Q-Tel, where we can help guide you in, you don't need cleared people, it's a rifle shot into a particular area, you're trying something, if you feel the pull from the other side, then you can hire and provision a federal team, maybe hire cleared people. But you don't want to spend all that money and energy as a young company until you feel the pull from the other side, because the sales cycles are just way, way too long. So it's much easier for a company to go direct into the civilian agencies or the non-DoD or IC agencies. But if you want to try and crack the DoD or IC, I wouldn't advise you do it unless you had a partner like In-Q-Tel or a really relevant experience base with a problem that can, have people help guide you in.
Even if you do have an In-Q-Tel or another organization, do you see some common pitfalls that have led to people not being able to get into the government, even though we identified them as a successful technology?
Yeah, so there's a lot of people think, oh, I'll just show up with a great product and the government will buy it. There's a lot of other things that happen, particularly in the intelligence DoD community. Some people have heard of foreign ownership and control. If you have investors from outside North America or the US, and even if they're Canadian or they're, Germans or French or whatever, you still have constraints on holding cleared resources and cleared people and being able to service classified networks. So be wise, eyes wide open when it comes to, how you can sell to these agencies and what the profile of your company is. So if you have foreign ownership and control, like executives that are not US citizens, recognize the fact you're not going to be able to hold clearances. So you need other ways to support those customers. There are third-party contractors, integrators, people who can represent you into these markets, which is a pathway to go. So that's one thing to take into consideration. The other is that there's a thing when you're trying to take a big blob of software from a company and put it on a classified network, even though you may pilot software into these areas, you need a thing called an authority to operate, where this whole security process occurs, where the software is vetted, all the controls and instrumentation around the software are understood, and you run through a whole security checklist. And that energy and time and resources to get the government to accept your product and put it on a classified network is absolutely non-trivial, and it takes a pull from the other side. So even though you have the greatest product in the world, without the support of your government partner to work through an authority to operate approval procedure, you're never going to get your software bought and deployed on classified networks. So it's things like that you need coaching to make sure you don't put a lot of money and resources into something and end up at the end of a pier versus a bridge.
Okay, so it sounds like you want a dual use technology, a problem, and be aware that the cycle is long and difficult, and you need a partner. Why don't we then turn to what those are In-Q-Tel portfolio companies. Maybe let's turn to David for a minute, and let's talk about early stage companies and raising financing and capital structure a little bit. David, can you explain to us why early stage companies should think carefully about their capital structures and those key elements of those structures that would facilitate either further fundraising or doing business with the government?
Sure. Thank you very much, Bruce, for your question. And thank you to you, Bruce and George, for serving today on the panel with Holland and Knight. It's an honor for Holland and Knight to be here with both of you today. And thank you to In-Q-Tel for all you do to advance the mission of your customers. It's tremendous. So thank you. Capital structure is very important to early stage companies. Capital structure is a means by which companies organize their equity and debt investments in the company. And if companies are thinking about their capital structure wisely, they are using their capital structure as a means to incentivize behavior from all of their stakeholders, whether they're early stage investors, their friends and family, and angel investors, their early adopters of their technologies, their employees. Capital structure is important to all the stakeholders of the company, and it really is a very effective tool to incentivize the behavior that's needed in order to help to grow the company and deliver the company's products or services and advance the mission of the company's customers.
David, does the identity of the people holding capital in the company affect the ability to do with the government? Because what you're talking about is using capital structure and the components of it to make it likely that everybody's pulling in the same direction for growth and government sales. Does it matter who is in those and what the relative balance of those? Does that matter?
Yeah, absolutely. Bruce, it's a tremendous question. It's never too early to start thinking about who is in your capital structure. It's quite common for founders of companies to want to go, and they want to deliver on their products and their services to their customers, and they want to get going as quickly as they can. And they might think about taking money in any form and from whomever they can get it, and that would be a mistake. Yes, it's absolutely critical to get going, especially if you've got a high cash flow burn rate. But you need to be smart about it, and you need to think about who's in your capital structure, because you don't want to take money from just anyone. You want people in your capital structure who are going to add value to your company and to the mission of your company. You want people who have been there and done that, people who are experienced working with the various three-letter agencies, for example, that many of In-Q-Tel's investees work with. So it's very important to surround yourself with the right people who can add a lot of value, a lot of thought, a lot of experience, a lot of connectivity to help you grow your company. We have been blessed for a long time right now with a fairly ready access to capital. Has it diminished a little bit in the last few months? Yes, we've started to see a little bit of pullback, especially in reaction to SVB and others, but capital is still out there. So you've got to choose the right people who can invest not only their money, but also their talents in your business. You also want to be careful about who comes onto your your cap table that might be problematic in the future. And these could, especially if you're going to focus on serving the Intel community, and you can easily envision that you're going to bid and work on classified contracts, and you're going to have a SCIF and all of these things. You want to be very careful about your investors, and you have to think about not only who the funds are that might approach you, but you have to think sort of the next level up as well. Who is invested in these funds? Are these folks from overseas? And what are the indirect consequences of having people from outside the United States indirectly on your cap table through these funds? So it's very important to think about who's on your cap table for many reasons.
As you do that, are there any special considerations when you're getting funding, either for debt or equity? Any special considerations that you should think about when you're doing a term sheet about putting in maybe for non-US equity or the ratio of debt to equity? How do you think about that quickly?
Absolutely, and Robbie and Aaron can speak to this also a little later in the webinar. But you absolutely need to think about the mixture of your debt and your equity, and who's providing equity and who's providing debt. And if they are from overseas, frankly, it's okay. The question is, does that equity and does that debt amount to control or influence? Doesn't even have to get to control. If a non-US person has influence over your direction of your business and your management, your policies and your operations, all of those things can be potentially problematic. So if you're looking at a fund that may have overseas investors, and 5% of the fund has overseas investors, and this fund is going to sit on your cap table at on a fully diluted basis at 5 or 10%. Robbie and his team are probably going to say, well, we need to take note of that, but it probably doesn't in and of itself amount to influence. But then you have to go beyond that, and you have to look at the terms of the investment itself, what the security is that they're buying, right? And if it's a preferred, what are their rights as preferred holders in the company, and do those rights amount to influence? So it's not outcome determinative to have non-US people on your cap table, but you need to think about it, and you need to think about whether or not that non-US ownership is going to amount to influence that might run afoul of government rules.
Terrific. That serves as, I think, a pretty useful transition to talk to Robbie. Robbie, the audience that David's describing is the US government. And the US government cares about different types of things. They care about particular technologies they see about risk. They worry about foreign ownership, control, or influence. And they also worry about the leaking of technologies, the export of technologies that may be beneficial to national security. Can you speak to us a little bit about those issues, about what small companies, emerging startup companies should think about from technology, export control, and FOCI?
Sure. We'll do that in 1 second. I just want to first read the CLE code for those participants who are seeking CLE credit. It is HK 2304184368. So again, that code is HK 2304184368. Sure. Bruce, just to answer your question, sort of take them in order. I think one of the topics, or one of the themes that a couple of panelists have talked about generally, which I'll put a little bit more meat on the bones, is the idea of foreign investment. And some participants might be aware of the Committee on Foreign Investment in the United States. Some might have heard of CFIUS, but this is not a CFIUS webinar, so I'll give you the very, very bottom line on that, and then talk about some best practices around foreign investment. So CFIUS, in short, it's an interagency regulatory process that reviews foreign investments in U.S. businesses that present national security considerations. So the types of companies that In-Q-Tel is working with, many of them, if not most of them, touch national security sensitivities, either because of who their government customers are, or because of the technology that they're working on or that they're developing. And so if you have a foreign investor and you've got a US business that presents national security sensitivities, there might be a basis for this interagency committee of US government agencies to review the transaction. I think it's really important to understand that historically CFIUS was only looking at control investment. So David talked about not giving up control to a particular investor. After 2018, there were new rules that came out, and now CFIUS looks at minority investment. So this impacts in significant ways for the venture capital community that might be making investments in U.S. businesses that would be under 10%, but maybe taking a board seat or an observer seat in a Series A round or a seed round. These types of investments can now trigger CFIUS jurisdiction where 5 years ago they could not. So we've got a kind of a new regulatory landscape that brings in a whole host of transactions that before were not relevant. But I want to underscore an important point, which is that foreign investment isn't bad. The U.S. government has an open investment policy when it comes to foreign investors, but the key for early stage tech companies is to really think about and plan around that foreign investment to make sure that you are accounting for regulatory risk and you are mitigating it to the extent that you can. So what do we mean by accounting for that risk? The first thing to do, if you're an early stage company, is make sure that you're performing due diligence on your investors. So David mentioned there's often maybe a foreign GP or a foreign owner of a U.S. fund that has a U.S. subsidiary that appears to you to be a U.S. investor. You want to make sure that you're conducting diligence up the ownership chain to include the ultimate beneficial owner. Make sure you understand, is this in fact a foreign investor that's coming onto the cap table? And to be able to sift out, those foreign investors that might present threats to national security and those that would not. Obviously, all foreign investment is not created equal. There is some from some countries that is more problematic for the U.S. government than from other countries. So that initial due diligence will provide important information to address the risk presented. The next thing to think about is when you are developing your transaction documents. So David talked about some term sheet considerations, is to really build into your transaction documents, including in a side letter or other contractual language that is specific to foreign investors, that ensures the passivity of the investment, or that memorializes the absence of certain rights that David mentioned that could provoke U.S. government scrutiny. So, for example, you might have a really interested investor from the UK that wants to write you an equity check. They're not that concerned about taking a board seat, but they really want to get onto the cap table. One strategy to ensure that there's no CFIUS trigger for that investment is to develop, for example, a side letter that would memorialize the passivity of that investment and be able to, indicate the various rights between the parties. Because don't forget that when it comes to national security, it's not only the parties that are negotiating the investment, but it's also the audience of the U.S. government that you need to be aware of. And so having that side letter and being able to present it to a regulator if they come knocking is a great way to mitigate CFIUS risk. Another couple strategies to consider that we often will think about is, let's say you do have another foreign investor that wants to come onto the cap table that does want to take a board seat. And maybe there would be a need to make a CFIUS filing for that investor, but timing is really tight. And you want to close the round as soon as you can. You want to get capital in the door as expeditiously as possible. We often have advised companies on doing what's called a springing board seat. So, for example, you can have a situation where there's a tiered closing, and you close the round and you get the equity up front, and then you pursue a CFIUS filing as a second tier or a second stage in order to have that board seat to arise following CFIUS clearance. So there's a variety of ways that companies can think about foreign investment and plan around the potential to have them on the cap table in ways that lower the regulatory risk for companies. The last thing I'll say on CFIUS, and again, we could talk a lot about it, is that doing a risk assessment is really important. If you're an early stage technology company, you might think, I don't want to spend a lot of money when I'm raising money in an early round to focus on regulatory issues, but it can really pay dividends if you've done that assessment up front. You've identified the potential risk areas, and you've taken the baseline steps that you need to do to account for those risks, either in the transaction documents or in structuring considerations for the round. It all can be done with relative ease as long as it's done far enough in advance.
Robbie, one of the things that I've learned is that export control matters even for the smallest companies if there's any technology involved. Can you touch for just a minute on maybe best practices or why early stage companies should care when export control doesn't, immediately hit their radar?
It's a great question, Bruce. And one of the common pitfalls I see with a lot of our clients is, they're in the R&D phase, they're pre-revenue, they don't have any customers yet. So why are they concerned at all about export controls if they're not actually exporting anything? But the reality of export controls is that it does apply to a variety of technologies that are not yet on the market. And so let's say you're a wholly U.S. company and you've got a foreign national star engineer who's helping develop your product in the United States. There's a concept known as a deemed export, where if you're sharing controlled technical data or software source code with a foreign national, even in the United States, you can have an export control problem on your hands. So taking the prophylactic steps of doing an export control assessment of your technology as early as possible is advisable to make sure that even in the R&D phase of your technology, you're not tripping up over any potential export control issues. The other place that I see this come up is if you have a contract manufacturer that might be located abroad, you're sending that contract manufacturer specs or technical data. in order to design something for you that you can test in the US, the step or the activity of sending that technical data to a contract manufacturer or a partner or an affiliate outside the US can raise an export control issue. So it's important to do from a compliance standpoint. It's also important because investors are going to ask you. So if you are raising a Series A round and you've got, for example, a foreign investor that's interested in coming onto the cap table, they want to make sure that there's no mandatory CFIUS filing. And so they're going to ask you, how is your product classified? And you want to have that information in hand when you're trying to close the round and not have to go through the process kind of in real time of determining how your products are classified. So taking the steps up front is very helpful from a risk mitigation perspective, but also to help facilitate quick and clean fundraising.
The other thing I would add, and I'd like to get to Aaron in quickly, but Robbie, is that certain technologies from certain countries have drawn the scrutiny of the US government for national security reasons. Am I right that companies should also think about what they incorporate into their products if they do intend to sell to the US government?
Yeah, it's another great question. So, and I'm sure Erin can touch on this as well, given her government contracts expertise, but there are certain companies, mostly from China and Russia, that have restrictions on sale to the US government. And so companies should be mindful of their supply chains and where they're sourcing their components from to ensure that the handful of companies that are essentially prohibited from selling to the US government are not incorporated into deliverables that you might be then selling to the US government. That puts the company at a really difficult position of either having to not go forward with a sale or to find replacements for those components, kind of at the last minute. So thinking about supply chain and planning, where you're sourcing those components is critical.
And I note that for the record that the list of companies that draw that scrutiny often change, and therefore you can't be sure that even if you plan ahead, that there's not some risk there. So it's a risk mitigation thing. Aaron, I wonder if we can turn to you for some thoughts. Now people are right in front of the government, and the government cares about both the company, but also as contracts go on, about compliance. And compliance is a watchword because if you don't comply, you get in a lot of trouble. Can you speak a little bit to the issue of sort of strategic advice for early stage companies looking to get to the federal government, but they don't have a lot of money, they haven't raised a lot of funding. What can they do to sort of get a baseline compliance program in place that would put them in good stead with investors and also with the government?
Absolutely. Thanks, Bruce, and thanks everyone for having me today. So my biggest piece of advice for companies that are starting to approach federal sales is really to start slow. We like to see companies take an incremental approach to federal contracting so that they can slowly ramp up both their experience and exposure in the government market and their compliance infrastructure. So things like starting as a subcontractor, particularly on a fixed price basis. George referenced the GSA schedule program. You can approach a prime contractor about potentially getting listed on their GSA schedule, maintaining the products or services as a commercial item. These are all strategies that can sort of limit the amount of potential liability and risk exposure that a company has initially, and also retain a lot of flexibility in the contracting process. So some basic compliance strategies as the company explores these opportunities can focus on a compliance infrastructure that puts the company in a good posture from the government's perspective, of course, but also doesn't overtax either the budget or the existing employees or business systems of the business, because we don't want the compliance infrastructure to be the tail that wags the dog when it comes to getting into the federal government contract space. So with that in mind, some initial steps to take include a basic code of business ethics and conduct. This can even just be an addendum to the employee handbook, distributed to employees involved in federal sales with some corresponding basic training for those types of employees so that they understand procurement integrity and other restrictions with working on government contracts. Next is identifying a specific individual within the company, such as a chief compliance officer, to really oversee the company's federal sales and the compliance program. And this person should have adequate resources and access to management sufficient to really be effective in that role. Third, I'd say is to undertake periodic reviews over time of the compliance system just to ensure it's working and it's up to date. So, over time, the company can really continue to grow the government business and the compliance infrastructure in parallel so that the policies and procedures, again, are really right-sized for whatever the portfolio is at a particular time, and the two can grow up together as the company wades more into the waters of government contracting.
Aaron, does it matter if for a code of conduct, where do you find that? Does it matter how extensive it is? Is it easy to do? Do you need a lawyer to do it? Are there resources online? How do you, if you were a startup, how would you go about doing that?
There is a fair bit available out there, and the FAR has some subsections that really go over sort of the basic items that you would need to see in a compliance policy like that. The same sort of infrastructure that's going to be appropriate for a 50,000 employee core government contractor is not going to be appropriate for a technology startup who's really just getting into the government space, although you might see similar topics covered in that type of a code. So there's lots that can be done just through searching in the FAR and some online resources. Sometimes we have companies who have really taken a lot of steps on their own to do those policies, and they just come to us for a quick compliance check. And that can help keep budgets in line and make sure the company is doing the right thing as they grow into the space.
Would that cover cyber policies? I know the government has a number of cyber initiatives to keep everybody safe. Would that also be part of your compliance program?
Absolutely. So a supply chain program is really important, and Robbie alluded to some of this, making sure that you're appropriately vetting suppliers and vendors where you're sourcing equipment or working with subcontractors that are supporting your performance of government contracts. That supply chain risk is something that contractors really need to manage, and having some early attention to it can avoid problems in the long run, or really having to undo something that's already been done. And so some key sort of checkpoints along the way with some advisors strategically, I think, can be really helpful.
Okay. So you want to get a government contract, you don't have a lot of money. The government touts Buy America, and it also touts small businesses. Can you give some tips maybe about what kind of enhancements or preferences and the like exist generally, and what companies can do to understand the eligibility requirements for those?
Yeah, so there's three sort of flavors of these preferential statuses that I probably see the most often. The first is just basic small business status. So to be small for government procurement requires a company to have fewer than a certain number of employees over a 24-month look-back period, or under a certain amount of revenue over a 5-year look-back period. And the size standards of the number of employees or the receipts really depends on the industry that the company is in. And the Small Business Administration sets those size standards and periodically updates them. The regulations that the SBA puts out also guide companies on how to calculate number of employees or receipts, and that's a very specific definition from the SBA. So that's sort of the first flavor we see a lot of. The second is qualifying for a particular socioeconomic status. So in addition to being small, this introduces an element of majority ownership and control by a particular qualifying person, such as a woman, a service-disabled veteran, or a socially or economically disadvantaged person. And again, the SBA has definitions of sort of the concepts of control and ownership that attend these programs. The third is SBIR grants. And these can be a fantastic tool for companies who are really trying to ramp up, research and development and eventually commercialization of a particular technology. And they're structured as grants. The companies who qualify, in addition to being small, there's an element of domestic ownership. So you have to be majority owned by individual US citizens or permanent residents, or other small businesses that themselves are directly owned and controlled by US citizens or permanent residents. There are some agencies who allow majority ownership by multiple domestic VCs or PEs as well. So that's something to keep in mind for companies that are interested in exploring these grants. One sort of overarching aspect of eligibility for these programs to keep in mind is that the size of a company is determined not just based on the company's employees and revenue, but also that of any affiliates. And the SBA has a very particular definition, again, of sort of what it means to be an affiliate. It can include the sort of more obvious parent-subsidiary relationships, but then also minority investors. So, Robbie and David both talked about being careful sort of how your cap table evolves over time. And in addition to the sources of that capital, the rights that those individuals or entities obtain through investment, because even a minority investor with particular rights in a company can be considered an affiliate. And if it's a VC or a PE with other portfolio companies, that can really expand sort of the universe of companies you have to consider in your size. So there's a lot of information available through the SBA. And there's also obviously the opportunity to work with advisors who have particular expertise in this area to make sure that you're compliant at the outset.
So now you got a small company and it's thought about these compliance issues. It's sort of ready to go, and it's given a contract. It's found an end user. It's thought about all these things, and it's ready to sell to the government. It gets a contract. I've now experienced this quite a bit. The role of data rights and patent rights. Can you give a little bit of guidance and overview of the importance of reading a contract before you sign it and not taking it as something that is fixed, and how to protect yourself, and who you might ask to look at it to make sure you and your company are protected?
Yes, you should read the contract before you sign it. That is absolutely number one piece of advice. I think one of the pitfalls we see sometimes is that companies are incredibly excited to get into the federal space, and that's perfectly natural. It's a huge opportunity, but that can also lead to sort of taking terms that walk in the door and not sort of scrutinizing the provisions that are included, either from a compliance perspective or that could be detrimental to the company long term. And I really encourage companies to be thoughtful about both the partners that they work with and the opportunities that they pursue. Subcontracts and prime contracts are negotiable. There are going to be some basic compliance obligations that are in them that are not, but you can negotiate lots in these subcontracts and prime contracts. And there shouldn't be a sense of, from a small startup company, a lack of leverage or an inability or an intimidation that, the big federal government or these large primes are so sophisticated that we can't say anything about the terms that are included. It is hugely important for companies to be mindful of the obligations that they're taking on for compliance and protecting the company, as I said, long term. So IP and data rights are a great example of that. A company is entitled to restrict the rights that a prime or the government gets in its IP, and those IP rights are dependent on the source of funding for development. And so early attention to tracking the funding sources for development work, identifying IP that's potentially going to be delivered to the government or a prime in performance, and negotiating those rights right at the outset. And then once you're in performance, marking the data and the IP that's delivered appropriately are all steps that are required to maintain the company's rights. And long term, that's a huge piece of the company's value. So certainly worth being mindful of it from the beginning. And I'd say too, if you get into a contracting situation where you are uncomfortable with where you've landed in terms of negotiating IP and data rights, that is an opportunity you can walk away from. And I don't think that companies sort of consider that. They consider the sort of sunk costs. Everybody's been so invested. They're really excited about this opportunity, but it is not worth handing over the rights to your IP when it comes to the government sort of long term. So definitely keep that in mind as you get into these relationships and seek out, advice along the way at sort of these strategic intervals where it can be really a huge value add in the long run.
I think what you just said is important and encapsulates a lot of what we've heard from everybody today. The federal government market's a different market. It's not the commercial market. It's got restrictions and considerations that other markets do not. It is worth knowing, generally speaking, the rules and the context for dealing with the government. And it's important to seek advice. It feels to me like some of that advice is public and can be consumed off of public sites. It is also important to have advisors, whether they be legal advisors, board advisors, or other advisors who understand the landscape and can sort of separate the wheat from the chaff. We're at about the 5-minute mark. I don't know if there were any questions, but in advance of that, I thought I'd just go around and ask each of you to think about, to distill your thoughts and pick maybe one or two things that you think would be most valuable if you were counseling either a lawyer to a startup company or a startup company about what, from your point of view, they should be thinking about, and the one thing that they should definitely do and not do. George, maybe if we could start with you.
Well, I think everybody said it here, start slow, don't spend a lot of money on the federal channel until you feel the pull from the other side, and make sure you've got the product market fit figured out. So without a partner like In-Q-Tel or some other pathway, I wouldn't go certainly to the IC or DoD too early unless you have something super applicable to the government. And I would start slow and wait till you feel the pull before you invest a lot of money, because it's very long sales cycle.
David?
Yeah, I'll echo that. I'll echo what Aaron said and what George just said in the sense that don't rush to take the first offer of capital. Make sure that the folks that you're inviting into your company, into your family, are the people that you want to be there. These are people who are going to add value to your company down the road. That would be point number one. And point number two is it's never too early to think about the exit as well. So make sure that as you are bringing people into your capital structure, that you're always thinking about the exit. Sometimes founders, frankly, they give too much away early on just to get some capital in the door. Remember, capital is a means of incentivizing people. And if founders and employees and others are not properly incentivized to grow the company, those who invested early looking for a big reward may be disappointed. So get the right people on your cap table, make sure that they're adding value, and always think about the exit and think about how you're structuring your capital structure to make sure that everyone's motivated to get you to the end game.
Terrific. Robbie?
My one piece of advice would be to plan your regulatory roadmap in the same way that you're planning your product roadmap. And it doesn't equate to spending a lot of money on legal issues upfront. It just means thinking about the regulatory risk as your product is being developed to make sure you're accounting along the way for different potential issues, whether that's export controls and trade compliance, carefully considering the foreign investment considerations of your investors. And then what we didn't talk about, but if you want to do classified government contracting work, it's a very attractive and interesting sales channel. But in order to pursue the classified government contracting channel, you need to plan for it in advance and ensure that any foreign ownership, control, or influence that you have, whether that's through an investor, through a bank, through a customer, is properly mitigated upfront.
Terrific. Aaron?
Sure. So I think my two pieces of advice are, first, the culture of compliance, I think, really starts from the beginning of the company, and the people that you bring inside to help you along the way. And you really want to be comfortable that those people are going to not only sort of stand up and protect the rights of the company in contracting, but also flag issues they see and really approach government contracts like all other sales and relationships with the idea of doing the right thing. That culture of compliance will go a long way. And then second, to just document the heck out of your efforts to be compliant from a federal government contract perspective. That documentation is key to establishing, again, sort of that good faith efforts to comply along the way, and can really mean a lot when you're undergoing an either M&A activity, a financing, or anything else. You want to demonstrate to investors or the government in a sort of inquiry of some kind that you've taken the time to understand your obligations and to document those efforts along the way. So don't be afraid of federal government contracting. It's a great opportunity, and just take it one step at a time.
I think that's terrific. And I think if people follow all those simple pieces of advice, they will be much better off in terms of understanding and accessing the government market and dealing with those who are in that community. Robbie, let me give it back to you. You opened it up. Thank you very much.
Sure. So there was just one question which we'll take really quickly for Aaron. Can you distinguish SBIR rights with standard rights under government contracts when you obtain a government contract for R&D?
Yes, SBIR rights are a very particular type of data rights along sort of the full spectrum. That's a sort of webinar onto itself. I'm happy to talk to that person offline, but yes, it's a different category of rights and that can be distinguished right at the outset and
Okay.
long-term in the contracting relationships that the company has.
Great. So to the extent you have questions that were not answered, all of us are available to talk offline. I just want to thank the team from In-Q-Tel, Bruce and George, for your participation, your insights. I know you are doing an important, you're executing an important mission to help bring some really amazing technology to the U.S. government. And so on behalf of Holland and Knight, I want to say thank you and thank my co-panelists for your insights and your perspectives. It's quite valuable. And we look forward to seeing everyone again soon. Take care.
Thank you very much.